Hello, everybody. My name is Yaman Tashtavar, and I bring you daily updates on Tesla, tech, and the markets. Welcome to Tesla Live. Let's get started right away. All right. Markets are drifting a little lower after a strong open today. Nasdaq is up 1%, S&P 500 is up 0.8%. Advancing issues are triple of declining issues. Pretty quiet day. Tesla is up 6% after yesterday's massive drop. Broadcom is down 4%. We're going to talk about their earnings, and Lululemon is down 20%. We're going to talk about their earnings as well. Jobs came in a little higher than expected, although lower than previous month in May. We discussed yesterday that these numbers are going to be revised. I expect this number to tick up to 4.3 after it's revised next month. Average hourly earnings were strong at 0.4% versus the expected 0.3%. As a result, treasury yields are much higher today. 5-year treasury yield is higher by 13 basis points. 10-year treasury yield is higher by 10 basis points, and 30-year is higher by 7 basis points. Crude oil is at $65 per barrel. Crude oil is at $65 per barrel. Let's move on to S&P 500 heat map. If you have any questions, comments during the live stream, you can leave a comment both on X and YouTube. And I checked every now and then to make sure there are no questions that I haven't answered. So you can do so and let me know what you think of the live stream. Microsoft is up 0.4%, Apple is up 1%, Tesla is up 6%, Nvidia is up 1.5%, Google, Meta also up. Broadcom is pulling the index down a little bit. Um, we're going to get to Broadcom earnings, but before that, there's been a lot of news yesterday on Trump and Musk. Let's start with that. Trump and Musk trade insults as row erupts in public view. The rift between US President Donald Trump and his former advisor Elon Musk has erupted into the open, with each trading insults after the tech billionaire criticized one of Trump's key domestic policies. The two billionaires escalated the feud throughout Thursday, lobbing barbs at each other on the social media sites they each own, suggesting a bitter conclusion to their unlikely alliance. The day began with Trump saying he was disappointed with Musk's criticisms of his administration's centerpiece tax and spending bill, musing that it may be the end of their great relationship. Musk then accused Trump of ingratitude, adding, "Without me, Trump would have lost the election." After hours of sparring, Trump appeared to downplay the situation. "Oh, it's okay," he told the news site Politico. "It's going very well, never done better." His aides have scheduled a phone call with Musk on Friday, the same news sites reported. I think this was denied later on, but we're going to go into that a little later. Musk also appeared to believe there was a need to patch things up late on Thursday in response to a post by Blackman, a prominent Trump backer, which suggested the pair needed to make peace. He wrote, "You're not wrong." The breaking point in the relation between the president and his one-time ally came after weeks of Musk lobbying against Trump's big, beautiful spending bill, which was passed by the House last month and is awaiting a vote in the Senate. Shortly after leaving the Doge after 129 days in the job, Musk took to his site X to call the big disgusting abomination and posting, "Shame on those who voted for it. You know you did wrong." He argued that the bill will irresponsibly add to the US national debt and encourage his followers to phone their representatives to express opposition. He argued Trump defended the bill while speaking to reporters during a news conference with German Chancellor Merz on Thursday, saying, "I'm very disappointed because Elon knew the inner workings of this bill better than almost anybody sitting here. All of a sudden, he had a problem." He went on to suggest that Musk was upset about the removal of subsidies and mandates for EVs, which could affect his Tesla business. Okay, so this is the critical point in my mind. I do think that this has something to do with Elon's 180 on his support for Trump. And not necessarily just for EVs, but also incentives for mega packs, which is a growing part of Tesla, a profitable growing part of Tesla. But without those incentives, it wouldn't be as profitable, or it might not be profitable at all. I guess if this bill passes as is, we'll see. Megapacks and also battery production. So for each 4680 battery that Tesla produces, Tesla gets paid thousands of dollars. So I think that if this bill passes, the bill that passed House passes the Senate, Tesla is going to lose billions of dollars, in my mind. Um, so that's my forecast. Musk denied this was the case and wrote, keep the EV solar incentive cuts in the bill. He says EV and solar incentive, but he doesn't say anything about battery production incentives. Tesla gets paid billions of dollars for battery production and also incentives for megapacks. That would be the energy storage business, energy storage incentives. So he doesn't say anything about that. I think that's the critical piece here. Even though no oil and gas subsidies are touched, very unfair, but ditch the mountain of disgusting pork in the bill. Pork is a term used politics to describe wasteful government spending. The partnership between the two men began when Musk endorsed Trump. We all know the history. Um, Musk took credit for the sweeping Republican victory. Okay, you can't read the rest of the article if you pause. But Tesla stock dropped 14% within hours of the road bursting out into public. There's also some SpaceX component here too, because on his Truth Social network, Trump claimed that Musk just went crazy, writing the easiest way to save money in our budget, billions and billions of dollars, is to terminate Elon's governmental subsidies and contracts. It's more like tens of billions of dollars. I was always surprised that Biden didn't do it. Musk's companies, including Tesla, SpaceX, and Starlink, have direct contacts with the US government, and like many other businesses, also benefit from subsidies and tax breaks. In response, Musk said SpaceX will begin decommissioning its Dragon spacecraft immediately. The craft is used to shuttle people and supplies to the International Space Station. However, he later appeared to back down. Okay, we won't decommission the Dragon. All right. Now, in his response, Tesla shares gain after $152 billion sell-off, but Trump-Musk truce uncertain. Tesla shares recouped some losses triggered by a spat between CEO and the president, although truce appeared uncertain on Friday, as a White House official said the president was not keen on talking to his former ally. Earlier, a political report had said Trump and Musk were likely to talk later in the day. Musk had signaled on X he was open to easing tensions. But Trump told CNN on Friday, I'm not even thinking about Elon. Yes. Adding the billionaire has got a problem. How many problems? Tensions escalated on Thursday after Musk stepped up his criticism of Trump's sweeping tax bill, which proposed largely ending the popular $7,500 EV tax incentive. See, none of these articles are talking about the Megapack incentives or Tesla energy incentives or battery production incentives, which I think is a bigger part of this spat. He might be a bit too hopeful to think their relationship will ever go back to what it was once. But if cooler heads prevail and the tension eases, that would definitely be a big improvement for Tesla, said the shareholder. An open clash with Trump could pose multiple hurdles for Tesla and the rest of Musk's sprawling business empire. The US Transportation Department regulates vehicle design standards and would have a big say in whether Tesla can mass produce robotaxis without pedals and steering wheels. Tesla stock is down 30% this year after a 14% drop on Thursday. Still, the shares trade at 120 times expected earnings, a lofty multiple compared to other automakers and even tech giants such as Nvidia. The shares have been on a turbulent ride since last July when Musk backed Trump's White House bid. They surged initially as investors bet on less regulatory pressure for robotaxis, but tumbled due to the soft sales and brand fallout from Musk's political stance. Stronger sales from potential Republican customers were expected to offset liberal boycott, only expected by Tesla bulls or Elon, which that was never going to happen. But analysts warned that Musk's recent actions may erode that buffer too. With Musk alienating Republicans, there is no one left to prop up consumer sentiment towards Tesla, which could lead towards a full-scale collapse in brand perception. Full-scale collapse in brand perception, said political strategist Evan Roth-Smith, co-founder of Slingshot Strategies. Now, on the other hand, Musk's XAI expects annual earnings over $13 billion by 2029, Bloomberg reports. Billionaire Elon Musk XAI expects, now I would take this with a grain of salt, to generate more than $13 billion annual earnings by 2029, according to numbers revealed by AI startups banker Morgan Stanley. Morgan Stanley, which is seeking investors for a $5 billion debt sale of XAI. Okay. So Morgan Stanley stands to make tens of millions of dollars from this deal as a kind of fee. And so that's a hell of an incentive for the analysts to kind of prop up all Elon Musk companies, including Tesla. Open the AI startups books to those willing to commit at least 50 million, Bloomberg reported late Thursday, citing people with knowledge of the situation. The development comes as Musk and President Trump have been involved in a huge public spat. XAI expects $1 billion in gross revenue by the end of this year and $14 billion by 2029, the report added. I'll take the under on that. Gross revenue during the first quarter stood at 52 million, while XAI lost $341 million before interest EBITDA. Wow. Gross revenue in the first quarter, 52 million, and the negative EBITDA of $341 million. That's wild. That's pretty crazy. This is a really wild statistic right here. I didn't realize this situation was that bad. Startups in the AI space typically burn through huge amounts of cash, with billions poured into acquiring pricey advanced data center hardware and attracting top generative AI. But this is EBITDA. So it excludes depreciation, which excludes depreciation of the hardware. And this is really interesting. I didn't realize this situation was this bad. XAI plans to spend $18 billion on investments in data centers going forward after spending $2.6 billion capex, according to the report. Besides Morgan Stanley's $5 billion debt sale, XAI is also seeking a valuation of $113 billion in a share sale worth $300 million. You know, if the company is indeed worth 100 billion plus, this $300 million share sale is not going to be indicative of this really. So I wouldn't, like, if I was running a business valuation, I wouldn't take this sale, it's very tiny, as an indication of value for the company. Let's read Broadcom first. All right. We're going to read this first. We have an internet problem. New World Order. Ocean rates up 88% as shippers pounce on lower tariffs. It took 1 week for the frenzy to set in the eastbound Trans-Pacific. Mid-high average spot rates paid by shippers in the 75th percentile of the market for transit from the Far East to the U.S. East Coast have surged by an astonishing 88% since May 3, according to analyst Zenita, now standing at $6,100 per 40-foot equivalent unit. I mean, the main takeaway here is not really the price. It's the fact that these things are surging and plunging by massive amounts. So there's going to be a lot of inefficiencies in the economy, global economy, because of this volatility. The 90-day respite from higher duties has led liner operators such as Costco, Evergreen, and other companies to amplify their spot rate charges, pushing for hikes as steep as $3,000 per FEU. Okay, let me see if there's anything else. The 88% increase in market mid-high spot rates on the Trans-Pacific trade shows shippers are so concerned about getting goods moving again during the 90-day window of opportunity of lower tariffs that they are willing to pay more. Right now, it seems carriers are telling shippers to jump, and some are replying, how high? This spike in rates, according to Sand, is a temporary phenomenon. With capacity returning to Trans-Pacific route, the frantic rush of shipments is expected to subside. As supply chains gradually recover and inventories grow, the pricing pressures will diminish. Sand anticipates that the spot rates will reach their peak in June before descending as capacity constraints ease. Additionally, the fluctuations in the trade have ripple effects on the other routes, such as Far East to North Europe. Although indirectly affected by US-China tariff situation, this route feels the impact of global supply chain uncertainties. Okay. Broadcom. Broadcom rides on AI chip demand to deliver upbeat revenue forecast. So it's an important company. Let's read what they said about the AI wave. Broadcom forecasts third quarter revenue above Wall Street estimates on Thursday, betting on strong demand for its networking and custom AI computing chips. However, the company's shares fell 4% in extended trading after gaining about 12% this year, as the forecast failed to impress investors who had bet heavily on chip stocks, anticipating substantial growth driven by advancements in generative AI technology. Broadcom forecasts third quarter revenue of around $15.8 billion, compared with analysts' average estimate of $15.7 billion. Clearly, expectations were high coming into print, with the stock rising almost 30% in the past month. Broadcom, a key player in the AI hardware ecosystem, helps design custom processors that are highly specialized integrated circuits designed for AI and cloud computing companies such as OpenAI and Google. Began shipping its latest networking chip, Tomahawk 6, designed to accelerate AI workloads. The networking chip doubles the performance from its predecessor and significantly improves the efficiency of bits flying across data center networks. My kind of overarching view of the AI hardware space is that other companies are catching up to NVIDIA. Not catching up, but closing the gap, let's say. Closing the gap with NVIDIA in terms of performance. We expect growth in AI semiconductor revenue to accelerate $5.1 billion in Q3, delivering 10 consecutive quarters of growth as our hyperscaler partners continue to invest, Broadcom CEO said. Okay. Non-AI semiconductor revenue is close to the bottom and has been relatively slow to recover. Revenue from Broadcom semiconductor segments, etc. The comparable color. Okay. Let's see. Lululemon. This could be a window into consumer spending. Any questions, comments? Please feel free to leave a question in either on X or YouTube. You can do either. Lululemon shares tumble as yoga wear firm warns tariffs will crimp profit. Okay. Lululemon Athletica shares fell about 18%, now down 20%, during trading on Friday, as the maker of high-end leggings warned that tariff-related costs and uneven demand in key markets of North America and China will dent its profits this year. The Canadian firm, whose popular Align yoga pants sell for up to $128 a piece on its website, will take modest price hikes for a small portion of the assortment and ramp up discounts for the rest of the year, company executive said. Lululemon has struggled to retain shoppers despite its efforts to introduce fresh styles of sports bras and athletic jackets as it faced intense competition from trendier and more affordable brands in North America and mainland China. Despite America's decline, management continues to prioritize product newness and China expansion over addressing a pullback from core customers and evident traffic declines, Jeff and Allen said. We believe this misalignment is concerning. Lululemon joins sportswear rivals Nike and On in raising prices in the US, inflation coming, right here, and as erratic trade tactics under President Trump rattle global markets and fuel fears of a recession. Lululemon trimmed its 2025 earnings forecast and said it expects margins to come under pressure from the proposed tariffs, which will impact products from some of its largest sourcing hubs in Vietnam, Cambodia, and Sri Lanka. The company's latest results suggest Lululemon might be facing deeper challenges given the slowing of its domestic business over the past 12 months. 12 brokers cut their price targets on the stock. Forward price earnings multiple is 21 compared to the 31 for Nike and 9.5 for Gap. Okay. I want to kind of read about the stable coins and treasury market impact real quick and try to understand the space a little bit more. I think it might be material in future years. As stable coins take a step toward becoming mainstream, some segments of the US Treasury market, notably securities with shorter-term maturities, could be vulnerable to volatility as they become more closely tied to the world of currency. Congress is poised to pass legislation establishing a regulatory framework for stablecoins, expected to help legitimize the dollar-pegged cryptocurrencies, which are commonly used by crypto traders to move funds between tokens. Proponents of the bill argue that clear rules will spur further stablecoin activity and support a growing sector of buyers of short-term U.S. government debt or T-bills that are typically considered cash equivalent securities. But others worry a larger footprint for a relatively new and more volatile industry could in turn spur volatility in the bills market. Okay. In the event of a sudden loss of confidence, regulatory pressure, or market rumors, this could trigger large-scale liquidations, potentially depressing treasury prices and disrupting fixed income markets. I don't know. Seems like a stretch, but a problem in the stablecoin sector could spill over into the broader financial markets, affecting institutions holding similar assets and that rely on stablecoin liquidity. He added, if signed into law, the stablecoin bill would require tokens to be backed by liquid assets. Okay, so this is the important piece right here. Like US dollars and short-term treasury bills, and monthly disclosures from issuers on the composition of their reserves. That means if stablecoins are expected to grow, issuers will have to purchase more T-bills to back their assets. The bill could be passed by the Senate as early as next week and could eventually increase the amount of US treasuries held by stablecoin issuers such as Tether and Circle, the latter of which debuted in the NYSE on Thursday. They together hold $166 billion in US treasuries, according to a report by Bain & Company. The stablecoin market, currently about $247 billion according to crypto data provider, could grow to $2 trillion by 2028 if legislation were to pass. Standard Chartered estimated. The U.S. Treasury Secretary Scott Bessent encouraged lawmakers to pass legislation to codify federal rules for stablecoins, arguing that it could lead to a surge in demand for U.S. government debt. Currently, there are about $29 trillion of Treasury securities outstanding, of which $6 trillion are bills. In an April research note, JP Morgan analysts estimated that stablecoin issuers could become the third largest buyer of Treasury bills in the coming years. That raised red flags for some, who worry that would lead to closer ties between the crypto ecosystem and the traditional financial world. The Treasury Borrowing Advisory Committee, a group of banks and investors that advise the government on its funding, said in a study in April that growth of the stablecoin market at the expense of bank deposits could reduce banks' demand for U.S. treasuries, as well as have an impact on credit growth. Interesting. If stablecoin issuers have to move those treasuries quickly, or the market demands that, it could create some credit crunches there, said Mark Hayes, Associate Director for Cryptocurrency and Financial Technology at Americans for Financial Reform. Hayes said this assumes that stablecoins become more widely used after the legislation passes. Money market funds, which invest in short-term debt, could be impacted. Money market expert Pete Crane, president of Crane Data, said money funds are watching stablecoin closely, but the size of the market would have to become significantly bigger to create concerns over financial stability. Exactly. It would have to be much, much bigger, like an order of magnitude more bigger, even more. Treasury bills are normally so short in maturity that people don't concern themselves with price movements. But of course, in case of a rapid liquidation, the price is going to go down, he said. Issues with stablecoins have not so far been large enough to cause systemic problems, but the calculus could shift if federal legislation were to spur widespread adoption. In 2022, a meltdown in the crypto market sent Tether's stablecoin below its dollar peg, which caused no impact on the treasury market. At the same time, then U.S. Treasury Secretary Yellen said stablecoins like Tether didn't pose a systemic risk because they were too small in scale. In 2023, Circle's USD coin also lost its peg after the company revealed it held a portion of its reserves at failed Silicon Valley Bank. Still, some argue that there could be benefits from increasing demand for government debt. If we pass stablecoin legislation, dollars will be exported around the world, which will extend the strength of the dollar as the world's reserve currency, said Matt Hogan, Chief Investment Officer at Bitwise Asset Management. Roger Hallam, a global head of rates at Vanguard, said higher demand for short-term government debt instruments could incentivize the Treasury Department to increase T-bill issuance rather than long-dated debt to cover its deficit funding need. All right. You could choose to issue more bills to meet that demand, which would relieve some of the tensions. Okay, we're out of time. I had one more thing, but I think we know the kind of gist of this thing. Enough Trump Elon talk today. Okay. Any questions? Let's call it a day then. Thank you very much, everybody, and I will chat with you all next week. Enjoy your weekends. Take care.